Welcome back to the channel. I'm John Fox Ward. Thanks for coming. I want to have a little bit of fun today, if I could. And I want to just quickly recap the last couple of videos I did. One was a recorded webinar with Ryan Long for National Gold Consultants, and we talked about wealth insurance and using gold and silver as an offset. Um, to the deflating dollar, to the devaluing dollar. And I also am a member of the Liberty Dollar Financial Association, and I do own some silver, and I store it with them. It is physical. I can get the physical. It's not like what they talk about when they say you should own physical. You really should not have paper contracts like SLV and that type of thing, where it's not, you never had the physical. And so and you might not get it. They may settle on that paper contract. If you think you're buying silver and gold, they would settle in dollars. They're not going to send you the silver or the gold. I can get the silver or gold with Liberty Dollar Financial Association, but I want to talk about a bigger picture with them. And that is that it's an alternative currency and how we can use it as a means of exchange amongst everyone that we deal with, whether they pay us in silver through the Liberty Dollar Financial Association or we pay them, kind of in a sense like Venmo, even though that's attached to a bank account, we can share between us, family, friends, what have you. And what I want to show is an example if one person was making, and I'm going to start with the year 2000, if they had, I got to make sure I'm recording. Okay. So it looks like I am. So one person starting in 2000 making 50,000 and the other person's making 50,000 a year in income. And I'm going to use a quick example of two sisters, and they happen to live next door to each other. And I'm going to call this one um, Olive. This sister's name is Olive. They're really close, not just in proximity. And I'm going to call this sister Connie. So Olive is always an alternative thinker, and Connie is a conventional thinker. And they both married. They're both making this 50,000 in income. And I want to say that one, okay, so Olive is a health coach. Connie is a rock band singer. I probably should give her some longer hair, maybe spiked hair. I don't know. Something like that. She's got to be a little wild and crazier that way, even though Olive could be considered wild and crazy too. And Olive is a member of the Liberty Dollar Financial Association, and she chooses to be paid in silver by clients, by students, I'll say. And Connie is paid by the venue or per gig. Okay, she's got a band, so she's got a share, but she's making 50,000. She's receives what I would say a Federal Reserve notes or US dollars, USD. Uh, what Olive is receiving is she's paid in silver. So every gig, I mean, every student will pay her because they'll become members. Students join membership, LDFA membership. So they buy silver and then they pay Olive for her coaching. So I used the beginning of this exercise as the year 2000, 50K, and then I run to 2025 or October. Today is October 19th. It's a Sunday, 2025. But I'm also going to show you a spreadsheet where both of their incomes go up for almost 26 years, right? Because we aren't complete with the 26 years yet. And I will show you what each is making. So let me um, go to share. See if I can get to my screens. And I'm going to show you the spreadsheet that I created. So as you can see, I was able to price out what the average price for silver per ounce was in each given year from 2000 all the way to today. And I'm going to multiply that at some point, right? Or I'm going to divide, right? So let me just say, if in 2000 you received 50,000 in income, we're not going to talk about taxes. We're not going to talk about investing your money. I think we need to kind of get away from that. That's really what this exercise is about. It's an alternative way of thinking. It's a paradigm shift. But think in terms of the fact that if I had an average price of 491 per ounce for silver and I made 50,000, I'd have 10,183 ounces. So Oliver, so all Olive, she starts to receive all these different amounts of silver and ounces every year. And because they both will get an increase in pay of 2.56%, which is kind of a CPI number, but just think about it, it's also a raise. We could do it the opposite way and say, well, you're losing value because the 50,000 every year, every year there's a decrease in the value of that money. But let's just say we look at it in the conventional terms, certainly Connie does, that she's getting more money. She's getting a raise. But we know things cost more. So I wanted to use the example of this is the total amount of income. Sorry, you don't know what just happened there. So I'm going to go back and I want to tally this. Somehow I must have deleted it. So let me just scroll down and do a sum. Whoop, doing this on the fly. I had it set up before, but for some reason, hmm, oh, it went too far. So maybe that's the reason. Hmm, okay, strange enough. Go back. Let's just try to redo this whole thing. I don't know what happened. This really stinks because when you're unbelievable. So if I close this, let's see if I close it, don't save that. I don't want to save that. I want to go back. Let's Let's try opening that up again. Yeah. Okay. Okay. I don't know why that happened. Let me make sure we're still sharing. I don't think we are. S- Sorry, folks. Sometimes technology, right? Okay. So this is all the US dollars, the Federal Reserve notes over this almost 26 years. You can see that that tallied up if we were just setting that money aside. Okay, I forgot to tell you that Olive and Connie are actually married. And so there is other income. They've agreed, their husbands have agreed that we're just going to save all this earnings for each of you, for their wives. And so um, in the end, Connie ends up having, 1 point, let's just say 1.8 million that she has saved. Now, Olive has saved 136,000, saved 136,000 ounces, so 136K ounces of silver. All right. So I'm going to switch back to my camera. Um, well, let's just go. I'll just do it here, right? I'm going to say that, well, okay, Connie, you have 1.8 million. Olive, you got paid by your students that you coached in silver for almost 26 years. They gave you 136,194 ounces of silver. If I take today's price, which is higher than the year's average because we started much lower, right? But today's price of an ounce of silver on the COMEX, the Commodities Exchange, is 51.92. If you multiply 51.92 times 136,000 and change, you'll come up to 7 million. That's almost four times or 389% more in value. But you don't need to turn that into dollars. I'm using this as dollars, but this doesn't have to be dollars. If I was to buy from you and and I paid you whatever your service or product is, and I paid you in silver, which I can do through the Liberty Dollar Financial Association's membership, because I can transfer the ownership of silver that I have. But I don't want to give away all my silver because it's obviously worth a lot more than these Federal Reserve notes. So I want to be paid. So it's the choice of, do I get paid in real money, which is silver and gold, and in this case, silver, or do I take this debt-based currency of Federal Reserve notes? I don't, I know I have $7 million in the real world's buying power compared to this 1.8. So that's great. But I want to continue to earn. So when I provide, for example, consulting services, I want to be paid in silver. I don't want to receive these US dollars because they are shrinking in value. And so if I can, I'm going to try to go back to advanced and go to my second camera and just show you. Oh, sorry, I'm going to share it, right? So that's what I'm talking about is we saved 136, ounces. It was 51.92 equals over 7 million, and I'm going to use the two slashes because that's real money. $7 million that's worth, right? This doesn't change because this is USD or Federal Reserve notes. I mean, I think it's a pretty much a no-brainer. that that's what people would want to do, is that they want to have real money. And what we're faced with in the world is people wanting to just strictly say, well, I gotta invest my money. I've got to invest the income that I have or a portion of it. And maybe I'm risking and I got to keep working and I'm hustling and chasing the dollar. And I'm losing time with family and friends and time with myself. And this is a less stressful way of life. I wish I had known this. I mean, I was obviously working in year 2000 and, you know, I didn't have my own business at that point in time. Um, I, I didn't have a means of earning an income without Federal Reserve notes, but I do now. If people want my consulting services, I sell my consulting services. If they want me to look at different things, if they want to talk to me about infinite banking, and not have me be their, to be kind of unbiased and not be their life insurance agent. They just want me to help them through the process. Well, they can pay me that way, right? So if I had done this, right, rather than, tried to save in my 401ks and IRAs and so forth, it seems like, as they say, a no-brainer. Why wouldn't you do that? I think we have to shift this thinking. I want people to shift this thinking, because we are like a sinking ship as we continue create more debt in this country and our dollars become worth less and less. Yes, maybe the asset prices of our houses, our stocks, or our portfolio, it looks like it's growing because the number keeps getting bigger and bigger. But as we know, sometimes the market pulls back and does significantly and takes a long time to come back, whether it be the real estate or the stock market. And what we really want is something solid that's on solid footing, right? They can try to manipulate the price of silver and gold, which they have for years. But if they suppress it, manipulate it by suppressing the price, well, then of course that's almost like dollar cost averaging. You keep buying more ounces, right? Because they've kept the price low. And then when things can't, like the market decides we're going to be in charge, which is started to happen over the last few years. And we've got a long way to run. We can't just go like, hey, I think I should get some coins or I should get some silver and gold, and I want to hedge against inflation. No, how about an alternative to this system? Well, we have to be worried that we've got to have this type of insurance. If we had real money, which is silver and gold, in a particular weight and measure that our government said, that's the way we want to do this new country, then we wouldn't be in this situation where they're creating more debt for us. That's what issuance of new money does. That's what our loans, our mortgages, our cars, our boats. If you take a loan, we are actually contributing to increasing the inflation or the inflating supply of these notes, of these debts, which of course that's what they say on them. Federal Reserve note, a note, if you look that up, is a debt. And so I want to leave it at that, but please put comments in, address me on the math if you want. I'm happy to, engage. I really want to hear your thoughts. So thanks for joining me and I'll talk to you later. Thanks. Bye.